All right, good morning, folks. Thank you for joining us for our Fathom training webinar today. We are going to be learning how to get started with Fathom forecasts. Our agenda for today is as follows. We're going to spend a little bit of time touching on Fathom, and then we're going to talk about financial forecasting, what they are, and why you want to have a forecast for your business. Then we're going to dive into Fathom's forecasting module, and we're going to be going slowly, step by step, through the process of how to make an accurate forecast in Fathom and how you would use one to plan out the future of your business. One second here. Ooh, there we are. Hello, folks. So my name is Josh, and we'll be getting started here. Now, today's webinar is really targeted at those of you who are new to forecasting, and we're really taking more of a focus on the business side rather than the accountant or advisor side. So if you've made a forecast or two before, you're welcome to stick around with us and you may pick up a few things, but we're going to be going through the basics today. Now, our webinar is being recorded as well. So if any of you need to leave partway through, or you just want to be able to refer back to this later, we are going to be sending this webinar out to everybody here and everybody that registered as well. That recording probably will go out sometime next week just due to the holidays we have later this week. As we go through our webinar today, if you have any questions, please feel free to post those in the Q&A section of the Zoom call. It's going to make it a lot easier for us to respond to them. My colleague Max is also here with us today. He's going to be in the chat monitoring that Q&A section, and he'll be answering as many questions as he can during the webinar. I'll also save some time at the end of today's session to answer some questions live on screen. I do expect the main body of our webinar to go for about 40 minutes, but then again, we'll take that time at the end to answer your questions. By the end of today's session, you'll know sort of what a financial forecast is and why you may want to create one. You'll have an understanding of how to create and use a basic forecast within Fathom. But I do want you to keep in mind, we won't be able to create your forecast for you, and we won't be able to answer some of your more nuanced or specific questions that are directly related to your business. But we're going to do our best to sort of give you all the tools and help you out as much as we can in getting started. Now, before I jump into it, I am going to launch a poll here. It's got just a couple of questions that'll give us a better idea of where you all are coming from and what you're really hoping to see and what you're looking for. I am going to leave this poll up for just a few minutes, so no need to rush. I'll probably leave it up for actually a while, so take your time, and here that is. Excellent. So take a look at the poll. As you're filling it out, I am going to move forward, but we're going to go into the least important part of today's webinar first, and that's where I talk a little bit about myself. My name is Josh. I am a customer engagement specialist here at Fathom. I mostly work with new users or people who have taken a long time away from Fathom, and I help them get sort of educated or re-educated up on the platform and really help everybody understand everything that Fathom has to offer and how to utilize that best for their business or their accounting practice. So what is Fathom? I am going to assume that most of you are at least briefly or sort of slightly familiar with Fathom as a company, but just so we're all on the same page, Fathom is a cloud-based accounting software that does reporting, analysis, and forecasting. We were founded about 10 years ago in Brisbane, Australia, and actually our home office is still located in Brisbane. About 5 years ago, we opened our office in Seattle. That's where me and Max are located in today, and then we've actually opened an office in the UK as well just a couple of years ago. As a platform, we've grown over the last 10 years. We started out just as a suite of analysis tools. We added a reporting function after that, and the most recent major addition to Fathom is the forecasting module that we'll be looking at today. We just launched that, I think, about a year ago this month, November of last year, and it is, I think, one of the most requested things we had from all of our users leading up to that point. Now we are going to jump into forecasting just a little bit. I want to make sure that we all kind of are talking about the same thing when we talk about forecasting. And so we'll go over just a few brief descriptions. What is forecasting? So a lot of people hear forecasting, and especially for small businesses, you kind of think budgeting is really similar to budgeting, or you might kind of think that they're the same thing. Forecasting and budgeting are actually separate concepts, but they are very similar and they're closely tied together, as we'll see here. What a forecast is, a financial forecast, is we use a bunch of math and then we apply that math or you apply that math to existing financial data for your business to predict where your business will be in the future. So it's not perfect, but it's a great way to get an idea of where you're headed. A budget isn't using so much math. It's really a plan or a set of goals for where you want your business to be or what you want to achieve. Now, these are obviously very similar. They're both concepts that are looking to the future, but one of them is sort of a prediction of where you'll be, and the other one is where you want to be. And so you can see how they're closely tied together. Now, you might have heard you should have a financial forecast, but there's a lot of reasons why. You might not sure, which one fits you best. A couple of the major reasons that people create forecasts for their business are here. For one, it's a great way to create a realistic budget. As I just mentioned, if you're setting goals for the future of your business, it's probably a good idea to know where you're probably going to be or where you can be. So you can set attainable goals through your budget, but ones that will still sort of push you towards growth. Forecasts are also excellent for getting a better understanding of the future cash position of your business. If you create a forecast, you can have an idea of what direction you're heading. If your money's losing business, the forecast will really point it out to you, and it'll be a good way to know where you need to take action. And finally, forecasts are an excellent strategic business planning tool. They are a great way to model out different decisions that you might be planning to take for your business. And a forecast will help you know exactly when to make those decisions and to give you a good idea of what impact those decisions will have on your business's future. Now, all that being said, if they're so good, why doesn't everybody have one? You might have tried to create a forecast before, and if you have, you've probably run into some of these things here. For one, forecasting can be incredibly time-consuming. Traditionally, forecasts have been built out in Excel, and before that, even built out on pen and paper spreadsheets. It takes dozens of hours to create a financial forecast, and oftentimes that's just time that you're not going to get back. It might not seem worth it because one of the second issues is that forecasts can very quickly become obsolete. If you create a forecast that projects out a year into the future, you might be off slightly in the first month. That's not a big deal. But if you're off slightly every consecutive month, that's going to compound. And 12 months down the line, your forecast is going to be wildly inaccurate, which means you'd have to recreate it every couple of months and spend a lot of that time month after month to recreate your forecast. And that can be sort of difficult and frustrating. Finally, forecasts don't really reflect the changing business world. So for example, if you created a forecast for your business in February of 2020, last year, and you had a certain set of goals you wanted to achieve in the next 6 months in terms of growth, my guess is you probably didn't achieve those goals because things change. By the end of the month of March, probably your entire forecast was completely useless and you had to throw it out the window and start entirely from scratch. And so sometimes it just might not seem worth the effort to create something that isn't going to be that helpful down the line. But there are tools out there like Fathom that we're really focusing on and that can assist you in creating these forecasts and using these forecasts. And Fathom forecasts do a lot to solve some of these issues you see here. For one, Fathom forecasts are incredibly fast to build. We're going to use your pre-existing financial data that you already uploaded into Fathom. We're going to find patterns to build out your forecast almost instantly. And if you have spent some time building out a budget already, you can actually use that budget to base your forecast off of. So all the work that you've put in prior can still be used. Fathom forecasts are also designed to be a rolling forecast. So 3 months down the line, if your forecast is slightly off, we can just rerun that with the newer data so it's always up to date. And finally, Fathom forecasts are really great for business planning. They're designed around finding the financial impact of any new decisions, and they're an excellent business planning tool. And we'll go through some of the ways that that is in just a minute here. Now I'm going to exit out of our slides and we're going to jump into the platform. I do want to remind you folks, if you have any questions, please post those in that Q&A section. I think that should be open, and then we can get those out to you as we move along. All right. So as I mentioned, we will be assuming that most of you have already spent a little bit of time in the platform and you're kind of familiar with Fathom. If you're not, you can reach out to us afterwards and we can get you some more basic training resources. But today we'll be spending most of our time in the forecasting module. I do want to remind you though that Fathom integrates directly with your source accounting software, be that QuickBooks or Xero, or you can use Excel as well. And so most of the data that we'll be working with today has already been pulled in from, in this case, an Excel sheet that we set up for our demo company. We'll be using the Gray Sky coffee roasting company that I set up. And so we're just going to hover over this and jump right into our forecast. Now, the first time we open up a forecast in Fathom, we're going to get this little intro video here and a nice greeting. We'll just skip past this and go right into our setup. Now we're presented with 3 setup options here. I'm going to go through each one and tell you which one you should choose at the end. The first option here is our custom forecast. Creating a custom forecast will take just a few minutes longer. Fathom estimates about 3 minutes longer to get your custom forecast set up. You'll set a few things up first, and then it'll launch you into the platform. Now, for our first or second time creating a forecast, I don't recommend the custom forecast. It may be a little bit overwhelming, and they're going to ask you a lot of questions right off the bat that you might not know the answers to. So we're going to leave this one for later if you want to recreate a forecast down the line. On the other side, we have the option to link to existing budget. Now, this is great if you've already put a lot of time and effort creating a budget for your business and you've uploaded that budget into Fathom, either through your source accounting software or through Excel, then we can use that as the basis for our forecast. So we can save a lot of that work. However, if you just have a basic budget or you're planning to use Fathom to create your budget, we're going to be skipping over this option. And for the vast majority of you, I actually highly recommend we use the quick start forecast option. This will set up a lot of things automatically so that we don't have to do a whole lot of work and we can just review what Fathom has done for us. Now, no matter which option we do select, we can fully customize every single aspect of our forecast. This just sets the basic rules for us initially. So I'm going to select our quick start forecast, and then we'll get started. So when we first open a forecast, we'll be presented with our onboarding menu here on the left side. Our onboarding consists of several 2 to 8 minute long training videos that go over each individual tool and each individual feature within the Fathom forecast. Now you'll see I've already completed my onboarding, but I can go back and rewatch any of these videos I like whenever I want. It's a great way to get comfortable with all the features, and I really like that it's baked into the platform, so I can watch one of these videos and then close it and immediately do the same thing on the screen right in front of me. Now, I'll be closing the onboarding, but if you're using the platform and you want to revisit any of those videos, we can find that right down here in the bottom right, or the bottom left, excuse me. There's this logo with the glasses and the book. This is our education menu. We just click that and it'll pull our videos right up. Now, the Fathom forecast that we create is what we call a three-way forecast. That means we're creating or looking at three different financial statements. You can see here we started out in our profit and loss, but we also have a balance sheet and a cash flow statement. The majority of the changes and customizations that we make within our forecast, though, will be done within the profit and loss, and then these changes will affect the other two financial statements. Our forecast is going to project 3 years out into the future. So if you look here in the main grid, which is what we call this collection of numbers, you can see if we scroll off to the right side, we can go all the way up to 2024 for this particular demo company. So 3 years into the future. And if we look towards the left side, you'll see once we get past them, these white boxes are going to turn into gray boxes. The gray boxes are our actual values that we're looking at here. So this is the data that we've pulled in from our source accounting software. Fathom's going to by default pull in 12 months to your forecast, but we can use up to 24 months of data to drive that forecast. You'll notice here on the left side, we have our chart of accounts. This is what we've pulled in from your source accounting software. So here's my revenue accounts, my sales, shipping income, rental income. Here's my cost of sales accounts, and that'll go all the way down to the bottom. At the very bottom of the page, though, you can see another account here for cash on hand. This is actually not a P&L account, but it is very important when we're creating a forecast. How much cash you have is something that you really are focusing on for the forecast. And so we can see the numbers here for that. And anytime we make a change in our forecast, the cash on hand line is going to respond. So if I added $100,000 to my sales account here, we're going to see that reflected in that cash on hand account. Now, once we're comfortable here on the main grid, it's time to start making customizations and really editing our forecast. There's two major concepts we need to understand when we start changing things. The first one is called value rules, and the second one is called timing profiles. And we can find both of those by selecting an account. So I'm going to click on my sales account here, and then we can see my value rules and my timing profiles pop up. Now, a value rule is the equation that we use to figure out where we're going. So I mentioned earlier, a forecast basically uses a bunch of math to predict where your numbers will be in the future. The value rule is how we decide which math we're using. Fathom has a selection of different value rules available to you to drive your forecast, and we'll go through each of those in just a minute. You can select to apply a value rule to several accounts at once, or we can go by and change each individual account so that we can fully and thoroughly customize how our forecast is created. The second thing, as I mentioned, is our timing profiles, and the timing profiles affect how these different accounts get paid out. So for example, if you pay your rent for your location at the end of the year, but you have it on your balance sheet every single month, it's not going to be reflected here in the balance sheet, but if we plug in a timing profile, we can set it up so that that's paid annually and it properly affects your balance sheet. So it's only impacting it at the end of the year. Now we're going to go through some examples so this makes sense, and we're going to start off with our sales account. So if I select my sales account here, you can see the baseline value rule that we're using is called Smart Prediction Linear Regression. Now, linear regression can also be called line of best fit. And what we do is we take a collection of your financial data for this particular sales account, and then we plot it out on a graph, and then Fathom will find the line that best fits that selection of dots, and then push that line out into the future. And to get a better idea of what that looks like, I'm going to click on one of the cells for our forecast here. We're just going to select November of 2021, and then we're going to have a graph. So you can see here on the right side, I have a solid line that represents the actual values that I've plugged into Fathom. It's then found the line of best fit, and you can see it's pushed it out into the future. We go all the way up into October and November of 2024, and we can see we're expected to make almost $500,000 at that point if we continue at this growth. Now, this seems pretty good to me, so we're going to leave it be, but I do want to review some of the other value rules we have available to us. Now we're using that linear regression, but there's a different kind of smart prediction that we also can use. And that one's called average, or a rolling average. Now, this is exactly what it sounds like. We're going to take a collection of that financial data, find the average, and then push that out into the future. When I select smart prediction, either version, the average or the linear regression, I have the ability to change how much data I'm using. I can use either 3, 6, 12, or 24 months. And there's different reasons you'd select different amounts of data. Typically, the more data points we give Fathom, the more accurate that prediction will be. So we can use a better sort of trend. But if you have, let's call them hiccups in your financial data for some reason or another, we may want to limit that scope. For example, let's say your business was closed from January to July of 2021. If we used 12 months of financial data, then we're going to have a bunch of zeros in there, and that's going to bring our average down significantly, so we can narrow the scope here down to 3 months. So we're going to select 3 months. So we're using the average of the last 3 months to predict where that sales account will be. Now I'm going to save that rule, and then we're going to take a look and see what our graph looks like now. So it's a little bit different. You can see we still have that initial growth, but because we're using rolling average, Fathom's assuming that this is going to stay pretty steady, and we're going to see some pretty stagnant revenue there. Now, as a business owner, somebody who's experienced with my sample business here, I think that that's unlikely. So we're going to go back and remove that value rule, and we're going to stay with that smart prediction, linear regression. Now, what I recommend you do when you're setting up your forecast is use that quick start, but then go in and review each of the individual accounts just to make sure that you're comfortable with the rule being used. So I'm just going to take a look at each of our graphs. The sales account, we've just looked at it. It's pretty good. Shipping income, pretty similar. I think I'm happy there. Rental income is good. Other revenue, we can see a little bit of a spike here recently, but Fathom assumes that that is an outlier, and we're just going to continue with the same trend. I'm comfortable enough with that, so we're just going to move on. Now, when we jump into our cost of sales accounts, we're going to see something different. And I know that there might be some problems here because we pay our freight for our cost of sales a little bit strangely. If we look at our historical data, you can see I have just a tiny bit in November of 2020, and there's a lot of zeros in here. So a lot of months we actually have no freight cost of sales, but there are some spikes. January and February, we have some values there, and there's another spike in October. Now, if we select our graph, we can see Fathom chose that smart prediction linear regression, and it sees this number continuing to steadily grow. And I think that that's probably unrealistic. We do get some freight in January and February, and I know that this is recurring. And so I want to be able to model out the recurrence here. And then this big spike in October, we see that as well. And I expect to see that spike in October again of next year. So we're going to go into that freight account, and we're going to change our value rule. Now this one, I'm going to use one called link to previous period. And so we're just going to connect directly to a different period on our actuals. If I select that, it defaults to using actuals from last year. I do have the ability to look back at last quarter or last month, but in this case, we'll stick with the last year number. I'm going to create that rule. And then if we look at our graph here, we can see the spikes that we expected reoccurring, but we don't have that constant growth. So I'm a lot more comfortable with this particular value rule. I think it's going to be a much more accurate prediction of where that freight account will be down the line. Now, the other thing about my freight account is that I have a contract with the company that does my freight, and I actually only pay them at the end of the year. So even though we've incurred these fees to them in October and January and February, it doesn't get paid out until December. And right now, Fathom says we're going to be paying that out the same month. And so we're going to set up a timing profile to model what that would look like. I'm going to create a new timing profile, and there's a couple of options here. So we can set it up so we pay monthly, quarterly, or annually. For this case, we'll select the annual payments. and then we will push this out to month 12, which means we'll pay these off at the end of the year. Now, one thing I want you to notice when I select this here is that the values for our freight line in the P&L, they're not going to change at all, but the values at the cash on hand line are going to change because this cash is going to be moving out of that cash account at a different rate. So Fathom's going to be able to keep track of that. So we'll create that profile. And then you can see our freight account is now being calculated properly. If we look through some of our other accounts, we can see materials. I'm comfortable with that. Let's take a look at our commissions. I think this is accurate as well, but there's something about the way we pay out our commissions. With the commissions paid to our employees at this particular location, they're actually held onto for a month, and then the commissions are paid out a month later. And so we're going to create a timing profile to show how this would work. Now, right now, they're paid out in the same month, but to make sure that everything balances out properly, we're going to create a new timing profile. So this one will just be monthly. And we can see here we have the ability to set up different percentages. So the default example would be paying 10% the same month, and then 30%, and then 60%. In this particular case, we're paying 0% in the same month, and we're paying 100% in the first month afterwards. When we create this profile, again, the commission line on the P&L will not change, but the cash on hand line will reflect these changes. So we've set that up, and now we're happy. We're going to move now into our expenses and review these accounts. And if I select this one here, I can see on my general expenses, Fathom predicts that this is going to start growing kind of significantly. And you can see right here at the end in 4 years, it's got our expenses significantly higher than where they are now. I think that that's probably not likely to happen just because I'm aware of the trends I've seen before. So we're going to come in here and check what value rule Fathom is using. You can see we're using actuals from last year. Now that's the same value rule that we applied to our freight account, but Fathom has also added a 61% increase over last year. And that seems a bit excessive to me because that's going to compound pretty heavily over time. So we're going to go in and we're just going to edit that existing value rule. Now, I do expect some growth in my expenses, but probably not 61%. So I'm going to come in and change that to, say, a 10% increase in growth. We'll apply those changes. And then if we take a look at our graph, you can see these numbers are a lot more realistic. Now, you might have noticed that those numbers for all of my other expense accounts changed as well. And that's because that particular value rule that we were looking at, the actuals from last year, this was applied to all of my expense accounts the same. You see, when I hover over this value rule, all of the values in the expense line are going to be highlighted here. So that was being applied across all of them. We've lowered that for every single account. And now if we take a look through, all of these lines look fairly good. There's some spikes, but we expect that to be the case. And you want to go through all of your different accounts and make sure that all of these things seem realistic. Now we're going to fast forward and we're going to say that we've gone through every one of our accounts, set value rules that we're comfortable with, and we're ready to use our forecast. So we have a really realistic forecast here. There's a couple of things we can do. We can download this now. So if I go to the bottom left, I have this cloud button. I can download right to Excel so I can use my forecast in any other format. But if I come back a month or two later, I can also recreate my forecast as well, make it a rolling forecast. So if we look in the top right, we can see we're looking at monthly values and we're in October of 2021. But 2 months later or 6 months later, when I have 6 whole months of new financial data into Fathom, I can select this button here, and then we can recreate our forecast using 6 months newer data. So it's always up to date and accurate. All the work we spent setting up value rules and setting up timing profiles, that's all going to be kept, but the values are going to move forward. So we have the most up-to-date forecast we can get. Now we've created our forecast, we're really happy with it, but that's really just the beginning of what you can do with Fathom forecasts. As I mentioned, it's also an excellent business planning tool, and we have a couple of key features that are really great for this. And the first one we'll start with is what we call micro forecasts. You can find our micro forecasts in the top left here with this microscope button. If I just click that button, we can see our micro forecast menu open up. Now, a micro forecast is exactly what it sounds like. It is a really tiny forecast. It's a forecast of an individual self-contained business event. So, for example, let's say you're considering hiring an employee for your business, and you want to see what that would look like in your forecast. We could come in and manually add in that employee's salary every single month. We could take out their taxes and all of that. But then if we decide we don't want to hire that employee, we have to then manually come in and remove all of those values. Or if we want to hire them 3 months down the line, we have to move them 3 months out. And that can be a bit of a hassle. And so micro forecasts are a really easy way to create that scenario and then move it around. And we'll walk through to see what this looks like. Now, I'm going to go in to create a micro forecast. And we have a couple of settings here. So we're going to model out hiring a new salesman for our business. Salesperson. We can select an optional category and then pick the date. We'll say we're planning on hiring this individual in January of next year. We'll create the micro forecast. And then we can either manually add accounts here, or for the 3 most common uses of forecasts or micro forecasts, Fathom actually has these setup wizards that are incredibly useful. So we're going to start with the hire an employee setup wizard. We're given a couple of options, a couple of questions. So we're going to hire them as a permanent full-time employee. We're going to pay them, let's say $45,000 a year. And then we're going to be paying them out of the salaries and wages account. This account just comes from my P&L, and it's where I pay all of my employees from. We can go through other customizations, but we'll skip past that and then jump right into our micro forecast. Now, based on those 3 or 4 questions Fathom just asked us, it's already set up our micro forecast. We can see how much that employee is getting paid, broken down by month, the taxes related to that, the effect it has on our cash on hand line, our current year earnings. So this is ready to go, but I want to customize this just a little bit further. Now, because we said this is going to be a salesperson for our business, I think they're also going to have an effect on our sales account, which is not showing up yet. So I can come over here to add account, and then I can select sales, add that account. And right now, by default, there's no changes. But we want to reflect that this new salesperson will have an impact on sales. So we'll say starting in their 2nd month after they've finished training, they're going to make, let's just say 5,000 in sales. So we can directly enter that number. And then if we select the next cell, we can create a value rule to project that number out. So we're going to say they're going to make the same amount of sales as they did in the prior period. And we'll just look at last month. But then we're going to add an increase. So as they get more comfortable in their role, we expect that they'll slowly sell more and more. So we'll say a 3% increase over the prior month. If we then create that rule, you can see it getting modeled out and pushing out into the future. Now, this far down the line, it may not be as accurate, but it may be. One thing to keep in mind, though, is that the farther out your forecast gets, the less accurate it's likely to be. So this will be really great for the first 2 or 3 years that we're modeling out. Now, once we're happy with our micro forecast, we're just going to exit out here. And then if we click on our microscope again, we can see our micro forecast has showed up and it's green, so it's been turned on. Now, let's say we decide we're not going to hire that salesperson. We can just flip this switch, and our whole forecast is then going to rearrange or re-spin itself in response to these numbers being removed. So we turn off that hiring of a salesperson, and you can see everything will adjust. Now, it's a great way to decide if we want to make this decision or not, but micro forecasts work really well when you combine several of them together and sort of plan out the next year or 2 of your business. And so I'm going to exit out of our Gray Sky Coffee Roasting Company, and we're just going to check in on a different demo company that I've already set up a couple of micro forecasts, just so we can see what it looks like once you've got a couple. We're going to be using the Josh Demo 2 company. I'm going to jump right over here into that forecast. And you can see when I select my microscope, I actually have about a dozen micro forecasts plugged in already. We have a micro forecast to take out a big loan, hire a new shift lead, purchase a new delivery truck, some more sales staff, landing a big project with one of our major clients, purchasing a new warehouse. So we're modeling out several different decisions that we are hoping on making, maybe the big marketing campaign, or things that may or may not happen. So we can turn these all on or off. But when I have this many micro forecasts, the best place to go is one of our other tools within the module. That's right above our microscope. You can see this little roadmap. This is actually our business roadmap. So we're going to select it, and then we'll see a more visual representation. So we see a lot of blue bars here. Each one of these blue bars represents a different micro forecast that I've created and turned on within my forecast. When I hover over them, you can see big blue dots. The bigger the dot, the greater the impact this micro forecast has on the main forecast. And you can see this one's pretty short, so this far out, it doesn't really have that much impact. Now I can turn these on or off and see how it impacts my cash on hand line at the bottom. But I also have the ability to rearrange these. So let's say we want to hire this new shift lead, but instead of hiring them in December, we want to hire them in June. So I can just click and drag this over here to June, and then my forecast will respond and respin. And so you can play around here and set up different combinations and different timings of all of my different micro forecasts to come up with a business plan. Once we're happy with the setup we have, we can come down here to the bottom left again, and then we can download this. This time, instead of opening it as an Excel sheet, it's just going to come up as a PDF. And you can see here's our roadmap, here's the plan, and here's when we want to execute these specific micro forecasts, these specific business decisions. Now, you may want to try out different models as well, different combinations. There's one last feature we'll look at here that's excellent for that, and it's called scenarios. That's our little thought bubble here right underneath our microscope. And so we can come in here and create a scenario. Now, this is basically a secondary forecast. It's going to be based on our primary forecast, but we can try out different combinations of micro forecasts as well as different configurations. And we'll walk through this process. So when we create a scenario, we have two things we can customize. First, we're going to make sure we're basing this off of the main forecast. And then we can just select which different micro forecasts we want to use for the scenario. We can also change the timing of them. So we can say we'll take out this project in June rather than February. And so we have a nice combination. But the other thing we can do with them is model out different sort of scenarios that your business may run into. So for example, you have your main forecast and you expect to make a certain amount of revenue, but you want to be prepared for what might happen if business goes down. So we're going to call this our worst case scenario, so we can just be prepared. We'll name this here. And then we can add a configuration. Now, when we add a configuration, we can select a metric. So there's a couple of options here. We're just going to say revenue. And we're going to say in this particular case, we're going to expect a 5% decrease in revenue compared to our main forecast. So our numbers are going to be a little bit lower, and we want to turn off a couple of our forecasts as well, just so then we can make sure that we aren't overspending. We can then create our scenario, and we're dropped into it just like our other main scenario. So here's our business roadmap for the scenario, and here's our forecast main grid for that scenario. We can exit out of this just as easily as pressing this X button, and then we can jump right back to our forecast. And this way we can create different versions of the future, and so we can be prepared for whatever we have coming towards us. Now, once we're happy with our combination of micro forecasts, our business roadmap, and our main forecast, we can then use these in a couple of ways within the Fathom platform. First, if we want to keep track of how we're doing down the line, we can use our forecast as our budget directly. So if I go into my company settings here, I can go over to where we import our budget, and we can just import a budget from our forecast. And I've already imported my forecast budget here, but we can just simply remove that and then add a new budget using our forecast. And to walk through that again, since I went a little bit quick, we're in our main forecast here. I just went up to settings in the top left. This is our standard company settings that you're probably familiar with. And in step one, we have the ability to add a budget. So we can select our forecast, set the date range, and then we can use this. So next month, I can compare how I'm doing to those forecasted numbers. Forecasts are also fully integrated into Fathom's report center. So if you've ever used our reports, you can create really pretty, beautiful visual reports within Fathom using those forecasted numbers. So I'm going to jump over to our report center. Now, if I want to use this report, I can build it out by hand, a custom report, just like you do for your regular financial results. But we also have some forecasting templates ready to go, so I don't even have to do any work. I've said I want to create a new report. I can go over to use a template, and then I just select the template I want to use. For this example, I'm just going to use the forecast analysis default template. We're going to create our report, and then we have an excellent visual Fathom report. You can see charts with our forecasted numbers, where we expect to be, our projections, and then if we scroll down, you can even see a rolling 12-month financial statement with my P&L, and I even have the full three-way forecast as well, so you can see where we expect to be. We can download these as a PDF and share them out with our stakeholders for our business. So that's how we can use Fathom forecasts to plan out the future of our business. That's most of what we wanted to cover today, but I'm going to leave a few minutes. I mentioned I'd leave a few minutes at the end to answer questions here. So if you have any questions, I think Max is going to give me just a couple and we'll answer these on screen. Any good questions? Let me check if Fathom's sure. Oh, excellent. So the first question that we had was, can budgets be created in Fathom? I don't use QBO for budgeting. I think we just covered that, but to go over it again, once we've created our forecast, we can use the budget in two ways. I just walked through how we can save that as our budget within Fathom directly, but if you want that budget exported anywhere else, we can again just download our forecast as an Excel sheet so that you can use it in any other system. The next question, can budgets be uploaded from QuickBooks Online? Yes, we can use the budget from QuickBooks Online, as I mentioned. The way to get that into Fathom would be the same way we uploaded our forecast. So if I go into a QuickBooks company, I'll walk back just so we can kind of see where that would be. We'll look at this company somebody set up. I haven't used this company, so I hope it works. So this one has been connected into QuickBooks, but if we add a budget, we can pull that in directly from QuickBooks. Now, when we pull in your budget from QuickBooks, we're only going to be using the primary budget. The next question that came up, can you use variables such as headcount and FTE for HR costs versus just a % increase in cost? Yes, we do have the ability to add in variables. So I should go over some of the other timing profiles. I didn't touch on every single one because I wanted to cover the most basic timing profiles. So I'm jumping back into our forecast. I select my sales account, and there are a few other timing profile options. So we really just looked at smart prediction and link to previous period. We also have a link to budget option that I've mentioned. The two other options I did not touch on are constant/growing. So this would be a straight line forecast or straight line projection, and it's really independent of any of the data that you've inputted into the platform. And the second option that I did not cover was formulas or drivers. Now, formulas and drivers are the most complex value rule that we have within Fathom. So for beginners, I don't actually recommend using the formula or driver because it can be a little bit confusing at first. So unless you know specifically what you're doing, probably use this until you're more comfortable. Now, I will open it up to show you. We have Fathom's formula builder, the same as for your custom KPIs. So we can pull in any metrics. So we can say we want to use anything from our P&L, anything from our chart of accounts. We can include those in the formula. But the other thing it includes is what I call, or what are called drivers. Now, a driver is a non-financial metric that you use to drive your forecast. So your HR numbers or anything like that can be included. Now we can add drivers to our forecast by selecting this button right up here, just between my balance sheet and my cash flow, and we can choose to create a driver. So in this case, let's say we're modeling out HR costs and we know headcount. We can plug in headcount as a driver. We can select an optional category. This is going to be unit of measure, and then it's just going to be the balance. And then we'll create a driver. So I can either pull in data from a different source, or I can manually come in here and say, in the month of January 2022, we expect to have 25 employees, same for February and March, but maybe in April, we're hoping to hire, so we're going to add a 26th. And then we can come back and use these numbers to say our HR costs would be our estimated, healthcare cost by the company. So let's say it's about $1,000 a month multiplied by this driver here. And that's how we'd push our forecast forward. Now, again, this one's a little bit more complex. That's why I didn't cover it on the main body of our webinar, but it is good to know that it's there in case you want to get a little bit more detailed in your forecasting. How do you deal with loan repayments? Only the interest is on the P&L, but the principal is on the balance sheet. So that's a great question when we want to make changes to the balance sheet. So there are a couple of things that I didn't cover that we don't see as often, but we'll model those out. Now, when we jump into our balance sheet, there's two other features we have available to us that are not as common. Those are called schedules and journals. And the best way to create schedules and journals is to come into the balance sheet and then select an account. Now, a schedule is basically a shift in balance sheet accounts. So, for example, if we're taking out a big loan, we're going to have a huge increase in our cash on hand, but we're also going to have a huge increase in our loan liability. And so when we create a schedule here, and this one, we're actually going to model out, say, a purchase of our inventory. So this is going to be coming out of our cash on hand. And then we're just going to depreciate this constant and growing. We add a schedule. And actually, I think typically when you're creating schedules, I highly recommend you do them through a micro forecast instead. So I'll actually walk through it this way. We're going to call this purchase inventory. And then we're going to set this to be January as well. And so we're going to say we're calling this purchase an asset. Now the asset is going to be new inventory, or we could just add this as an increase, but we're going to spend about 50,000. And actually an asset is not an inventory. So we'll say this is a new truck instead. And this one will go into our truck delivery. Now, when we're creating a new asset, we're adding a new, we do have the ability to add a new account. So I can scroll down to the bottom and we can just say account doesn't exist yet. And we can make a separate account for our new truck. Can move forward. We can set the depreciation on this asset, the useful life. We'll just say this truck will last 10 years. And when we're done with it, it's worth a certain amount of money. We're just depreciating it out of the depreciation account. So this is one way we're using schedules and journals. We can add this micro forecast and we pay for it here. But if we want to create a loan, we can add loan repayments to a different micro forecast. So I'm just going to come in here and create one for that. And you don't have to do this as a micro forecast, but I find that it's a little bit easier to have it sort of self-contained. So we're going to add our cash account here. So this is the account that it's coming out of. And then we're going to add a the loan account. I don't know if I have a loan account on here. I think I do. Loan interest. Actually, that's not, we don't want to pay that one off. Tax liability. I've got one here for a new loan. We'll just say we're paying off this loan. And then we can add in a schedule here. So we link this account. So the other account would be the new loan. And we can just say loan repayment calculation. And then when we select the loan repayment, it'll come up with a couple of settings here. We can add in the principal and the term, the driver, and then we can add the schedule here. So that's the basics of how to get into the loan repayment, basically. Next question, my company relies on the location feature to get our number for the different divisions of our business. And am I able to run a forecast that is filtered only to show data for one or more locations? I believe at the moment, our forecasts do not have the ability to do locations within the forecast. If you want to sort it by that, you can create what we call standalone entities and create a different company for each individual location and create a separate forecast, but we don't currently have the ability to sort by that within the primary forecast. I think that's most of the questions I wanted to get to. We are close on time, so I think I'm going to end this one here. As I mentioned, we will be sending out the recording of this as probably sometime next week, so we'll follow up with you. If you have any other questions, please feel free to reach out to us. The best way to do that is probably by using this little chat bubble in the bottom right. You can see, you can access our support chat, and a real human being on the other end will get back to you. Typically, we have a 10-minute response time. They're great with answering your questions on forecasting. So if you just have a small one-off concern, we can get you there. Or you can send an email to support@fathomhq.com. I do appreciate all of your folks' time coming in today. I hope that this was helpful and hope it gave you some ideas of how you could use a forecast. But otherwise, I think that's it for today.